And it is the first trading day of the week, Monday, 3/22/2021. And as Mark just reminded me, spring is here, officially transitioning from winter to spring on the equinox here on the 21st. Welcome out to today's halftime report. Our daily show, we go through the stock market one step at a time, looking at the charts, the news, the information, trying to give it some context, some insight, so that you guys out there as traders can better run your daily routine. Welcome out today, everybody. Hashtag Team Tackle right in the chat. If you're a veteran of our community, come on in. Let's have a great conversation today. Let's keep it positive. Let's keep it fun. And like we always do, let's have a lot of good times here analyzing market conditions. If you're a brand new member of our community, you're here for the very first time, love you to click that subscribe button, click the bell, come back and join us. We do this show every day. Whenever the markets are live, we go live 12:30 p.m. Eastern time, 10:30 my time on Mountain Time. Welcome out, everybody. We got a regular crew here today. We got Mark, we got Matt, we got myself, Coach Tim. Matt, how are you doing, sir?
Doing good. Excited to be here with the crew to break down the action today.
Yeah, Marky, what about you? How you doing today, sir?
Well, my NCAA bracket isn't looking hot, so, but other than that, it's the fun things we do as a culture, right?
That's a great game we could play on the podcast. If your bracket was a stock, what stock would it be?
It's not a bad one.
I'm not a growth stock right now. No. No.
Maybe Tesla.
No,
it started out great,
Kathy,
and then we've had a big drawdown. I don't know.
No, Kathy Wood just raised her price target to 3K.
No,
I don't have that hope. No, I was the growth stock that everybody bet on that has no hope now.
Yeah,
that's my bracket. So I need that stock. The stock everybody thought was going to take over the world, and yet literally never sold anything. Yeah, I'm Nicola. That's my bracket. I'm Nicola.
All hope, no delivery.
Your bracket is a no revenue.
All hope, but you got dope. That's it.
That's right. That's right. Well, I mean, I think a lot of people feel that way after the first round of games. We always go into those things. We're thinking we're going to win. We've got the best picks. Far, though. It's been a fun tournament. If you love basketball, I think you're probably enjoying yourself. No doubt about it. There's been some great games and some great upsets, like the tournament always brings. But let's move into markets here and let's get have a conversation about what's happening across these broad markets. Matt, you were traveling on Friday and you were gone. That day, kind of driving and whatnot. So you didn't catch the market action. It was kind of a reprieve day in that regard. Markets didn't do much that during the trading session. A little back and forth action, ended up with a little bit of a doji. How are you reading price action here on a Monday as we're starting the week on a bullish note? The NASDAQ's up, the other indexes are picking up, not quite as much as technology, but we are starting on a strong note. How are you reading price action?
Well, I kind of feel like a little bit of a broken record during this volatile last few weeks in the market. I've started off a few Mondays. Well, this is what you want to see. Right. If you're a bull, this is what you want to see. And kind of we're there again. It's been a volatile ride in the market. No doubt about that, especially when you're looking at the NQ and you're looking at the NASDAQ. Obviously, lots of chop here. And, when you're coming on a big downward day like this, you want to see that upward movement of price. Big down day here, you want to see that upward movement in price. Big down day here on Thursday. Yeah. Obviously, some of you might be seeing this, but there's a day missing on the daily chart. So Friday's price action isn't showing up on the daily chart. But if you drop it down into a nice little 30-minute chart, you can see kind of the little slowing momentum. So here's that big drop on Thursday. You want to see it stick the landing. It stuck the landing here. You see that double bottom, double top analysis. You see that slowing momentum, and then it starts to pick up a little bit of steam. And then obviously with the NASDAQ and the storyline with the bond market being played out in this time frame, bond market kind of sells off. NASDAQ picks up on the futures market on Sunday, and then you see the cash open here on Monday morning, very strong in the NASDAQ as well. And so you get that slowing momentum on Friday. You see that the positive response coming into the futures market open on Sunday, following that with the positive cash open as well. And you get that you get the reprieve here on Friday, a little slowing momentum, double bottom, double top. Get your breakout here on Sunday's futures market open. Good follow through on the cash open here this morning, and that's kind of what you're seeing in the NASDAQ. But again, we've seen that story here before. You know, we've seen that, hey, this is what you want to see. Hey, this is what you want to see. Hey, this is what you want to see. Hey, this is what you want to see, right? We've seen that storyline play out. What we need to see in the NASDAQ is we need to see a higher high being established. We do have potentially higher lows being established, and that is a positive technical movement in the marketplace. And so as you can see, you see a violation of support, you see support hold, and then it comes back up into these resistance levels. But technically speaking, this is still a lower high than this. And so we might get a lower high, a lower low, i.e. support starting to build. And that would put a tremendous amount of pressure on the daily charts with perhaps a breakout of resistance. And while we're in these technical volatile patterns, obviously these storylines are playing out. But once you start to establish a higher level of resistance in the NASDAQ, all of a sudden now you're starting to walk up the stairs, and those trends start to become fairly consistent and fairly powerful. So we're still in the muck, Tim, in the NASDAQ. That storyline is still hot and heavy here regarding inflation, bond prices, and everything else. And obviously, many of those topics are podcast type topics to discuss. We'll have a lot of commentary later tonight when we release the latest edition of the Trade and Justice podcast later today. But as of right now, we're still in the thick of it. But you are seeing some bullish technical formations that could clear up this muddy little technical picture this week. And so I'm excited for the week that's coming up.
Yeah, no question about it. And quite frankly, you know, the technical analysis here on the NASDAQ is best done on a couple of different time frames as well. You guys have been nailing this for a few weeks now, Matt. And on that weekly chart, you know, you still have this little consolidation. It's not popped yet.
No. But think about it, technically coming back to that multiple time frame, you haven't popped yet, but you haven't popped because of the chop on the daily chart. And so that daily chart needs to clear out. And once you establish that higher level of resistance on the daily chart, you start breaking down that NASDAQ from a bullish short-term trend perspective. Well, what transpires if that occurs? Well, the NASDAQ confirmation on the weekly chart confirms, and all of a sudden you now have intraday, daily, and weekly timeframes aligned, and that's a pretty good, powerful technical environment to be in, quite frankly. It's always scary in the moment, though, because the way price action happens, up and down type of the news stories, it's always nerve-wracking in the moment. But once again, you start getting confirmation on the daily and the weekly chart, multiple timeframes do start to align.
Yeah, absolutely. Marky, what are you seeing in tech specifically? And then we're going to get into some of the other indexes next. But what are you seeing here?
Tech fascinates me right now. It really does. This market reminds me so much of the a stretch in the market we had last summer. And if you remember last summer, there was a really powerful algo theme in which we were dealing with reopening. And it seemed like one day tech would go up big, and then it would sell off a little bit, and some reopening plays and value plays would go up. And there was this back and forth, and it seemed to last forever. Now, the cumulative effect of all of that was a lifting market. You know, one area would have a day, a stretch, maybe a couple day period, and then it would the machines would rotate back into tech, and tech would have a good stretch. And this market reminds me so much of that, because right now, I mean, the markets look good. I mean, you're not getting broad breadth strength across the market by any stretch of the imagination. No. You're having some areas kill it. You know, I'm looking at my chart, just stuff I have. Wells Fargo down, finance down, energy down a touch. You know, tech up big. You know, underbelly not participating at all in this. They don't like anything. And that's what I remember from last summer, is that you had this really long stretch where tech would have its stretch, and then everything else would have a few days, and then tech would have a stretch. And if we get that again, the cumulative effect of that before was a little choppy, but it was a cumulative effect of lifting prices across the board. And so as long as real yields, inflation, don't cause market panic, as long as you don't have that jump, like right now, the 10-year yield is below 1.7. You know, nice drop off, tech having a good day, right? It's that program. As long as there isn't that panic, you could see some choppy price action for sure. Where one day, hey, today it's text day, maybe tomorrow it's finance and energy, and sells off a little bit. But that, as long as there isn't real panic, the cumulative effect last summer was lifting prices across the board. As long as there isn't panic, I would expect that to happen. But tech interests me more right now than it has for a long time.
It interests me technically. I'm very interested technically.
And what
here.
you said, Matt, because when I've been on the halftime report over the last year, and you've brought up multiple time frame alignment, and you said we're not quite there yet, right? Right now,
We're not.
Yeah, but when that has triggered on multiple time frames,
it's been powerful.
It's been a nice 10-day stretch following when that finally kicks in. So.
Well, think about all the algorithms just aligning together, like just party mode, right? But it's a choppy environment. There's no doubt about that. And right now, with the current storyline of growth concerns as tied to inflation and yield, right? Specifically in the NASDAQ and those aggressive growth areas of the market, it's going to be difficult for me right now until we start to get a little bit more clear there. Those cloudy skies kind of dissipate a little bit. It's going to be a little difficult to see that very, very awesome, amazing type of time frames when you get that and when you get this, until we kind of get a little bit further in the rear view mirror of this storyline. Because right now this storyline, bonds down, NASDAQ up. Well, what else goes down there? Cyclical.
Yeah,
right?
Energy,
your banks, your energy, your industrials. And so when you start to get all this aligned, when you're looking at the S&P, breaking out perhaps, and you see, maybe a snapback retracement to the 32K on the Dow, when you start to see all of it align is when you're like, oh my God, let's go out and let's party like it's 1999 and let's bring Prince to do it the right way. We're not there yet, but technically, and I am speaking technically here, I do see the beginning points of that happening. And so I think we're closer today than we were last week, and I think we're closer to and I thought we were a little bit closer last week than we were the week before. So I still think we're in the muck. I still think we're in some of the nastiness, but it's starting to get a little bit more clear, and I do like that.
Well, and on that cyclical rotation, like you're talking about, the Dow and the Russell, they've always been tied to that cyclical trend because of the composition of it, and they're kind of underperforming here today as tech is rallying. So,
and that's understandable. I mean, those cyclical areas have been really, really healthy on those longer time frames. Short terms, they've had a lot of momentum behind it. It wouldn't be shocking in any capacity, nor would I think it's a bad thing to see some degree of consolidation and let some time frame and some fundamentals and some behavioral analysis catch up to the technical condition. And in that time frame, tech could have a little bit of a catch up in the short term, no doubt about that. But what I'm most excited about is perhaps multiple time frames aligning from a time frame perspective, but also an index perspective. And you look at the S&P here, you're threatening a breakdown. Obviously, we're looking at weekly charts here. You look at that. That just looks like a pretty good, nice little high base horizontal breakout potential is what that looks like to me. And if you just see this technically here outside, now we're not looking at a daily chart, so you're not seeing all the chop, right? But if you just look at this from a weekly perspective technically, and you don't know the inflationary storyline, you don't know the central bank storyline, you don't know the bond market storyline, you don't know the growth concern storyline, you don't know any of that, you're looking at this chart, do you have any concern?
Not me. No. In fact, that just looks like a high base ready to break out, catching up with the 20 MA.
And if that clears that high base breakout channel, that's a trigger to a new leg up, right?
Yeah.
Well, you take a look. Let's take a look at the Dow. The Dow's kind of been the leader here a couple weeks ago, breaking out. That's just showing signs of consolidation and playing defense at the top range of the chart. Whereas this might take maybe another couple data points to set up really, really good and maybe a trigger above 33K. You're not concerned here in the Dow right now, like at all.
No, furthest from the truth, right? You're actually probably still most bullish on the Dow.
You're kind of excited.
Yeah.
I mean, you're not nervous though. You take a look at, the Russell 2000, similar to a little bit similar to the S&P, form a little bit of high pace. Obviously, Russell 2000 small mid caps are going to get caught up into the growth and the inflationary concerns too. But you're looking at the backdrop of this trend and the consolidation. You're not too nervous about the Russell 2000. Maybe a little bit of shifting volatility, similar to maybe the crude, what we've seen in crude. That does give me a little bit of concern here in the Russell 2000. So, the backdrop of the strength of the trend is very, very powerful, but I am seeing a little bit of shifting volatility here, similar to what I was saying about crude here before we started that big shift here. So I am a little concerned about the shifting volatility in specifically the small and the mid caps, and that could see some type of neutrality. There's no doubt about that. That wouldn't necessarily be a bad thing for the blue chips or the big dogs in the marketplace. And then you come back to the NASDAQ and you see this as a bullish retracement on the weekly chart, and you see that with confirmation. So we got some road to travel here, no doubt about that. But again, we know the time frame discussion, we've already done that. Now you're looking at the index conversation, and you're saying, okay, if we can get back up above these highs on this bullish retracement and trigger above that 33,300, you should see some clear selling to 13,900. You should see that, and maybe that's that 10-day stretch and catch up that Mark was talking about, that he has seen when these time frames do get aligned, that we see a little bit of quick catch up there. Maybe you see that, but again, you got to see that confirmed first. You come back to the S&P, let's see that break out of that 39.65 level, and let's see that confirm. And obviously, you got the big 4K backdrop that's going to play a significant whole number, but other than that, there's no data points there to suggest that it's going to stop it. So you do have indexes aligning a little bit. You do have time frames on multiple time frames aligning a little bit. And so that's why I say, and guys, you know me, I love to give context to all this analysis. And that's why I say I do think it's a little clearer this week than it was last week. And if you give it another week of us getting through this storyline, we got, oh my God, Mark, 20 Fed speeches this week, including 3 major speeches out of Chairman Powell. One today to the Bank of International Settlements, obviously on the crypto conversation and central bank digital coins. That happened today. Chairman Powell and Secretary Yellen is given speeches to the Senate Finance Committee on Wednesday and the House on Tuesday, and then you have 17 other speeches from the Fed this week. So we're going to have a lot more information as this time frame goes on. And yes, it does seem like there is a coordinated effort at the Fed to get their message out this week. So let's be patient as we listen to that message.
I don't know if I got 17 speeches in me, bro. I mean, I'm willing to be patient. And
not many people do.
To say, I don't know if I can process.
I would say
Fed
literally
speeches.
0.0000001% of the world population has 17 speeches in them, but I am one of that 0.00.
Hey, I don't know what you're talking about. I could hear Janet Yellen speak all day long.
Janet Yellen, no, that's a different speech.
That's different, bro. That's the Treasury Secretary, not the Fed. But I get the point.
I wasn't talking about the Treasury Secretary role either. That's the girlfriend.
It's going to be a busy week of Fed speak, like you're talking about. Jerome Powell even talking today, and then Tuesday and Wednesday. Those are going to be the headline ones. But I saw it in the economic calendar too, like just a ton of Fed speeches through the week.
It's just Fed. That's all it is. It's just Fed.
And there's no real economic data of note. I guess GDP on Thursday, but that's a revision after 85 days.
Oh, I don't care about that.
We don't really care.
Nobody cares about that. You got some manufacturing data this week, but overall it's a fairly light week economically. Everything's about what Powell says and Yellen says to the Senate and the House on Tuesday and Wednesday. And if what Powell said today is any indication of the fireworks we have later on this week, buckle up, get ready, because he's starting up with a whole bunch of nonsense here this morning.
I got to process a lot of that and think through it. But you're right. It is going to, I think you might have some headline risk out of Powell this week. But in general, Mark, how do you approach a week like this? Very light on corporate earnings, very light on economic data, lots of Fed speeches. Technically, we're just where we are in the market, where there's been the rotation trade going on. How do you approach a week like this?
The general way I'm approaching the market, and everyone's going to be a little different, right? And I'm always on the defensive side. I'm always on the conservative side. is that, until I see yields go up and tech not go down, I have a lot of plays exposed to tech. I have a lot of cyclicals. I have a little bit of everything right now. I try, pretty diversified. And, and I'm going to cash flow a lot of these things. And it's like, and I look at things in month time frames. Like we just got done. Hold on one second. Knock it off. My two cats are fighting.
That was the cat.
Yeah.
The cat just
they
that cat's going to be on Mark's shoulder really soon.
Yeah, my two cats are fighting, but and so with broad exposure, and I understand. Like, listen, we might have an up day, and we've seen this, like up day and then down day, right? I've made the decision that I'm trading through this. I have plenty of exposure, and so if let's say we have a great month, right?
Mm-hmm.
And between now and April expiration, which is 4 weeks away, we're up. And let's say I get called out some of my positions, I'm going to be very happy with the results, even if I lose some of my favorite stocks in the short term. And maybe I shouldn't have cash flowed. Oh, I should have just went directional. I'm still going to have a good month because I got exposure in a lot of different areas. Cash flowing, we'll see how it goes. Now, but let's say market gets spooked for whatever reason in the next, I don't have full exposure. I have plenty of cash to buy dips, to cost average down if things get out of hand. And so I'm trying to have a balance right now in how I approach. The trend since the election is still strong, even if we've been in a sideways chop for the last 6 weeks. JP Morgan says bullish, bullish, bullish. Bank of America says bearish, bearish, bearish. The banks are split right now. It's not the easiest market that we've had in the last year to read, right? Could go a lot of ways, especially on a daily basis. And so I'm trying to find that balance where if things go up, I'm going to make money, be happy with my results. And if things go down, I have cash available to buy dips, and then I'm cash flowing to help mitigate any losses in the short term in different areas. So diversified across the board, trying to find that sweet balance of bullish to the upside, but having cash available if things take a dip. So I'm trying to have my cake and eat it too for the next little stretch.
Well, and that's where the cash flow part comes in. But go ahead, Matt.
Well, yeah, but I think that's it. Okay. Yes, if you're cash flowing, you can get your cake, you can eat it, you don't care. I mean, that's fantastic. But from a directional perspective, it's going to be tough to see these sectors kind of aligning. They haven't been aligned very much in the past year, guys. Like they just haven't. And so and this is really kind of that first test into that 4-month stretch post-election where there's been a little cold water thrown on this cyclical movement, like just from a volatility perspective, a technical perspective, maybe a theme perspective. And so that theme, that economy reopening up theme is certainly being tested a little bit. But guys, we're also talking about a theme that literally last week, the central bank increased GDP expectations for 2021 to go from 4.2% to north of 6%, which is a historic bump, number one, a historic revision, number one. And if we do achieve 6% growth in 2021, that would put it into some of the biggest growth in U.S. market history in the last 40, 50 years. And so, yes, right now the market's throwing a little bit of cold water on that theme. I still think that theme is still very much well alive, and we just got to navigate some of these choppy waters right now. Now, Mark, you mentioned
I have long-term
bull
call spreads in almost all of the cyclical areas, finance, energy, and so those leaps out into 2022. I'm not touching those because of exactly what you just said. Yields are down today. You think they're going to stay under 1.7 for the rest of the year?
No,
not a chance.
No, not a chance.
not a chance.
No, not unless the Fed works out some real tricky things. But Mark, you mentioned the 10-year and tech. I do think that is one of the indications that will allow us to kind of see this storyline dissipating, is when bond yields go up and tech doesn't get smoked.
Yeah, and that is what has when Tim asked how I was doing on the market. That is what interests me most in tech, particularly the blue chip big growth names, all,
Yeah.
your Apples, your Facebooks, your Googles, your Amazons,
like not the technology sector. We're talking the NASDAQ, the stocks in the NASDAQ.
Yeah, not, some of the underbelly and the high growth stocks that have a fun time, they might struggle in any environment this year. But those blue chip names, the Microsofts and so forth, if they can do well, even with yields going up, I'm very, very interested on those blue chips.
So I think that's one of the things we can look to this week, though, as because when there's this many Fed speeches, and there is it's overwhelming this week with how many Fed speeches there are. They're like averaging 4 a day, guys. Like it's very like I think every single person at the Fed has a speech this week. Literally, the mailman has a speech this week. Like the person that delivers the mail at the central bank has a speech on something this week. That's how many speeches there are. And so, yeah, it is going to be a little overwhelming, but I think there's going to be, and I think it's going to be fairly volatile, but I do think we might be able to see some of those key indicators this week because we will be tested this week from a bond market perspective. That's the storyline. It's not over. We're going to be tested this week. And so that test that I'm looking forward in terms of the technical test we've already laid out, we got to see those multiple timeframes align. But from a key messaging perspective, I need to see that NASDAQ not get beat up if bonds go up.
Yeah.
If the 10-year goes up, and growth stocks get slaughtered, this storyline's still alive and well.
Yeah, we're
the
not
10-year. If the 10-year goes up and the NASDAQ takes the punch, I think we got a little bit more clear sailing ahead of us.
If and when that does happen, that would actually be a very, very good strong shot in the arm for technology stocks, no question about it. And it would probably improve their rankings in our sector rankings almost immediately, because that is the theme that we're concerned about there. Some of the strongest areas in the market have been those reopening themes, and we've still got great rankings on those, quite frankly. So
okay, so here's what you want to see: 10-year up, and yet these up.
Yep,
that's what you want to see. And we just haven't seen it yet. And we haven't seen it in the last 3 weeks, quite frankly. It's like, Mark, you know, it's like NASDAQ has a good day, everybody else hesitates. We're all trying to figure out this whipsaw. And one last point on the market, and then Tim, you can kind of move it into your next segment here. This is the last week of the month. This is the last week of the quarter. And you could have some rebalancing this week as well.
Is that the word of the week?
And so the rebalancing is going to be the word of the week. It's going to be the Wall Street word of the week.
It's not. The word of the week is transitory. You know, it's going to be said 47 times by Powell this week.
But yes, you're right. That's going to be annoying, and that's going to be a great drinking game for those that enjoy that type of thing. See, Mark, McDonald's cup could work there. But I do think rebalancing is going to be in competition with all this transitory type conversation the Fed is having. And it's because of the standard portfolio allocation on the 60-40 bond. Right now, because of some of this storyline in the bond market, you probably have had some Wall Street firms get a little misappropriated from a 60-40 traditional stock bond portfolio. And so, for example, let's say you in the quarter, you're now at, 65% versus, 35%. You could see some additional volatility and reshuffling because of the end of quarter. That could play a role. It might not. Just wanted to throw it out there as maybe a cherry on top that could impact the market this week.
By the way, while we are talking stocks and some of the sectors, rotation, whatnot, why don't we flash through the sectors a little bit here, Maddie? And, there wasn't a lot of upgrades or downgrades this week, quite frankly, as we kind of had a chalk week last week, coming into where we are. But there is a very big difference in our rankings between the strength in the market and some of the other areas who have been weaker in the market. And so I do want to talk a little bit about it.
Honestly, last week with what the S&P did, right? I mean, you're not going to see a lot of aggressive upgrades or downgrades with how we approach the market from a conservative viewpoint in our rankings, right? So when you see a market last week literally go from 3930 to literally around 3930, you're just not going to see a lot of upgrades when you get that type of candle. Just not going to happen, right? And so that's first and foremost. You saw a little bit of navigation. We do like the word navigation at Tack Train, no doubt about that. Just a little bit of a let's see how this market is going to perform after that big upward movement in price we had the week before. So if you remember, we had some fairly aggressive upgrades from the week before, and so you're a little bit overextended coming into this. Not surprising to see a little bit of a chop, a little bit of a analysis of putting that in the cooker and letting the time frame, letting this soak up the price action, allowing these moving averages to kind of catch up. Tackle Train knows the drill on overextended type rankings here. So you've got a week of consolidation. So you're not going to have aggressive upgrades or downgrades. We kept the S&P right there at 25. Now looking at the three sectors that have really played a role in the theme of the market, you're talking finance, industrials, you're talking energy. You then have basic materials with a little bit of a kicker on that theme in the market as well. So let's take a look at the strength in the market very quickly. And obviously a lot of consolidation here in the industrial sector. Looking at this on a weekly chart, you are a little bit overextended on the weekly price action. When you see this type of weekly price action, as you see here, it's not shocking to see a little bit of consolidation. We are talking about stocks like Caterpillar and John Deere, right? We're talking about stocks that have been around for a very, very long time. They're not those high flying growth components. And so, yeah, a little bit of stabilization at the higher price would not be surprising. So we did keep the industrial sector, one of our highest rated rate sectors at Tackle Train right there at the 15-yard marker. Finance right there at 15 as well. You're seeing a very similar type weekly response, a little bit overextended. Definitely stronger on the weekly chart. So when you're looking at this on the daily, though, a little bit more chop here on the daily than you're seeing in industrials. And so industrials has a better daily type chart. Finance has a better weekly chart. Both of them fit that theme in the market, though, right there at 15. Finance is going to run with bonds. Very similar to what's happening in the NASDAQ. So let's see that play out. But we are testing that 20-day moving average in finance for the first time. I do think that will be significant in how that plays out. So let's see how this first test of the 20-day moving average in this recent run happens. Remember, testing the 9, those are momentum. Testing the 9, that's momentum. Testing the 20, that's a standard technical support test. Let's see how it navigates that. But if it does, close underneath that, you'd be best to kind of wait to see this play out in the short term. Those things could come down into that 32, which would bring Goldman and JP and Bank of America and all those financial plays out there. That would bring those down on weekly charts as well. So keep that in mind in the financial sector. A little bit of relative weakness here, down close to 2% on the day. Obviously, if we would have saw this day on Friday, it would have got a downgrade by 5 into that 20-yard marker. Officially, though, as of Friday last week, we do have it at the 15. Let's see how it navigates that 20-day simple moving average first. Energy here just, getting caught up a little bit. You can't see that Friday price action, but caught up in the crude oil storyline, clip that, 20-day simple moving average. And like I said in finance, let's see how it tests that. But if finance breaks the 20, you could see something similar in finance that happened in energy. I do think a lot of us do like these deeper pullbacks, though, in energy, Mark. Obviously concerning in the daily price action, a little bit of a deeper retracement. You take a look at some of the more maybe not popular trading names, the big dogs of the world, the Exxon Mobils. You're seeing these standard deeper retracements here. You've been talking about these deeper potential pullbacks in energy for the previous week. Are they getting to these lower levels where you're starting to see support forms, starting to get a little bit excited on the potential opportunity, or do you see further downward moves in price here?
We pull up XLE. I know I'm a no-brainer buy at the old breakout level, and if you go to weekly chart, you can see it a little bit cleaner and maybe a little bit longer time frame than what we have here. That old breakout level, that is around 43,
45.
44. You know, in that range, right? You know, nitpicky with the rising 20 weekly. I'm a no-brainer buy adding exposure. And I talked about this a little bit on the weekend prep class with our pro members last night, is that I have exposure to energy, right? And so I have exposure to energy, but I'm willing to buy the dip. And if we dip back to that level, it's a no-brainer. Now, if we might not, right? I mean, energy still, recent price action notwithstanding, a very high sentiment area moving forward, just having just a nasty little stretch here over the last week. And we might see consolidation before that, and then a reversal pattern. And then, but basically it's like, I'm going to buy the dip. I'm going to have my existing exposure, right? And if I buy the dip, then I'm buy that dip. And then if it moves up and rips for a little bit, I treat it almost like a swing trade or a quasi position trade. And then it moves up. I take profits on that while keeping my existing exposure that is more of a longer term position trade on that. And then if energy chops for the next 3-4 months, not out of the realm of possibility, I can rinse and repeat that process. But like when you buy the dip, when you already have a lot of exposure, I think you look to take profits at that some point if it continues to go up while keeping your additional exposure. It's just that balance of trade management.
And when you're looking at the potential dip here, I mean, you got a few different levels that I think are interesting. And you don't have really anything intraday until you get to like 46.75. So that's where it kind of starts right there in that 46.75. So, you know, if you're buying the dip here, you're literally just buying the dip.
Yeah, like, you're just buying the
there's no technicals, there's no fun, like there's nothing that is actually supporting you. Like a true buy the dip to me is based on analysis.
Absolutely,
like it's always
100%.
based on analysis. So if you're buying the dip in energy, literally today you have zero analysis. You don't have technicals supporting you. You don't have market themes supporting you here today. You're in a volatile session here with some separation in the market. You have nothing supporting you outside of just random market mechanics. And certainly, right, dead clocks right twice a day. It could work, but you don't have anything supporting you. I like things supporting me, like support, like technical support. And so when you're looking at this, where this could start forming, I really like energy in this 46.75, 45 range. I think you got some really significant support levels here. Number one, on the weekly chart, Mark, that's your breakout channel right there, 44 to 45. That's your breakout channel there. You also have that rising moving average coming in. And if you'll remember, guys, everybody overreacted to energy here. Like literally everybody did. And what did it do? Find support on the 50-day moving average, right? Because everybody's like, oh, what if we're going to get this? Well, you did. And look at the 50, you know, sitting right under support. Well, here, once you start getting into that intraday levels of support around that 46.75, 46.50 level, you start getting into this major type support levels between 44 and 46, where the rising 50 is and the horizontal breakout channel is on the weekly chart. And so I love starting something with, give me another couple days. Shake out a few more. Give me a couple of days, because that's going to get everybody to freak out. And then what do we have? We have, I don't want to say that support is the U.S. military type support. What would be like the third best military in the world?
Currently? I'm going to give it to Canada, our dear friends up north.
Canada? Canada?
We got a lot of Canadian
80,000
friends.
South Park references just came to my head.
Mark, I want a game in the podcast today of ranking the military strength of the top 20 countries around the world. I want that game.
The US, China, the UK probably has still a very strong military.
It'd be the UK
Iran,
probably.
Yeah.
It'd be the UK probably. Depending how you categorize Europe, I guess. But it's let's just put it like this. It's not the US military type strength. It's not close to the US type military strength, but it's right under that. And so I do get a little excited when you start to see that type of strength of a potential backdrop that fits a sector that has been as powerful as energy. And so I do think dip mechanics are alive and well here. I just think like those dip mechanics are a little premature, and it could rotate. We could see intraday support levels form here, no doubt. I'm just saying you don't have the analysis yet.
Mm-hmm.
But you're in the range for that to start happening, though.
And what I love what you're doing, and I think this is important for traders to always realize, we judge things so often by whether it's red or green on our screen today. Your results at the end of the year are always dictated, I really believe this, by the trades that you plan out and are preparing to make in the days, weeks, and months to come. Patience and waiting for that setup and looking for the opportunity. You know, I know we get fixated on the daily results, right? But man, you know, it's those opportunities that that are developing that you're ready to take advantage of.
Team Tackle knows this reference, but if you give us another day, 2 days downward here, we're going hunting, guys.
Yeah.
I mean, that's what's going to happen. We're going hunting because that is going to be a pretty good opportunity. And hunters, they're patient.
It's like jets. We pull up jets because it's the same thing. I mean, we've had these negative COVID headlines out of Europe that are weighing on a few areas.
Europe, get your act together.
Distribute the vaccine. But it's one of those things is I'm not ready to get into jets now. But once again, if things like for whatever reason, because short-term sentiment can be really fickle, right? Really fickle. As profit taking occurs and people get worried, you know, in those reopening plays, in those cyclical plays, you know, a couple more days, right? You start to look to go hunting.
Yeah.
Yeah.
I like that phrase. So is that the phrase, Matt? So I get it right?
Well, Tackle goes hunting. Oh yeah.
Go hunting.
We get those bird dogs out there. We get the bird dogs out there and we go hunting. And so, yeah, and I think energy's getting into there. I don't think finance is there yet.
Finance isn't there yet.
To that. Industrial certainly not there yet. Could consolidate for a little bit of time frame here. We'll have to see how that plays out. Materials certainly not there yet. That's more in just a Feld Alpha 9. See how it's going to navigate the 20-day moving average. That's very similar to what we're seeing in industrials as well. So really, the buy the dip that you're really kind of looking at right now, in my opinion, is energy. When you're looking at some of those other sectors that are doing very similar to that fit that strength of the market theme, the cyclical theme right there, I don't think you have the same read on finance that you do energy today. I don't think you have the same read on basic materials that you do energy today. I don't think you have the same read that you have on, you know, on basic materials that you do on energy. So when you're looking at some of these other sectors that really kind of fit that cyclical type theme that developed post election in November of the previous year, we're not in that same. You're looking at Feld Alpha 9s where we're trying to recover that 20 period moving average, where you still have potential breakouts, right? You're still in the, let's see if we can recover price early this week and still have breakouts, you know, later on this week, or momentum based type triggers, right? Buy the dip is something a little bit more significant to me. It's not a one-day downward movement in price. I think that's just how social media handles it. For me, it's based on analysis, and the only sector right now that's fitting the strength of the market type theme is energy. Now, the other theme that is the other sector in the market right now that didn't fit the cyclical theme, but has just been extremely impressive, though. Extremely impressive. Not getting caught up in the hoopla of the growth arguments that the NASDAQ has been, you know, attached to, right? They should have, communications should have, and comms didn't. We've been talking about that for weeks. We were very excited about the breakout of 74, and you got to love the defensive nature that comms played last week as well. And so comms right there, has that ranking right there at 15, one of the highest ranked sectors in the market, and comms looking to break out. I mean, comms is one of those sectors, is probably the only sector today that has not got caught up in the hoopla of the bond market argument, of the bond market discussion we're having. as market participants over the last 3 weeks. A little bit in the chop, but never violated a support. Broke out at a fairly clean 74 handle, held its head above the water, letting that 9 EMA catch up to the price action. And now the 9 EMA did that. We're looking at a potential breakout. So comms going to be active this week on the bullish side of the equation. So keep an eye on if we navigate that breakout here in comms. That could be something that's fairly exciting. Then we got a lot of boring, Tim, in your sectors. You got a lot of what is Staples going to do over the next 5-year type conversations. Utilities like, okay, does anybody want to buy the dip here? Does anybody?
Nope.
Anybody? So you got a little bit of that, a little bit of stagnation. These sectors certainly are separating themselves, and it's certainly a stock pickers market. It has been all year long, and it's certainly going to continue to be so.
Yeah. When you look at the differences between them, there definitely is separation, as you've mentioned, and it's really interesting to watch. And I'm most interested in the dip in energy, the breakout in comms. There's a couple of areas that are still very, very strong, but even that industrials trend, it might take a few days off. Nothing wrong with that. It's just been a juggernaut for a long time. So there's a lot of opportunities out there in the markets. I do want to mention before I lose my thought on it, though, militaries ranked. I got 2 different studies from professional organizations. The U.S., Russia, China, India,
Canada, 6,
Japan
7.
in the top 5. Canada came in at 21.
There you go, buddy.
21.
There you go.
The UK
That's what it's all
came in
about.
So,
8 and
so
9.
Tim, that's about par for the course on games.
Oh, silly.
That reminded me of your Verizon pick.
Hey, Verizon. Let's take a look at that stock. No, we're good.
Tim, I would like to give you just
Tim picks
credit.
Verizon number 2 in his draft, and he picks Canada number 2 in his military draft.
And Matt, normally Tim
That's
waits till Monday afternoon to lose the game on the
Can
podcast.
I just get the win?
It's nice that he's just like, listen, let's just get it out of the way. Let's lose right now in the morning.
Yeah.
So.
Dude, I have faith in the Mounties. Don't get me wrong. All right.
Is Iona still in the tournament? They're still in the tournament, right? Sweet 16.
There you go.
But Tim, whenever you start talking about you're in the zone of a dip mechanic, right? And you start talking about that hunting philosophy, right?
Mhm.
That hunting philosophy. Yeah, you go hunting. You go try to find the best dip, right? And so, like 2 seconds in, Mark, are you interested in CLR at 25?
No, not right now. No, I mean, listen, Matt, you really buy the dip is the.
Are you interested now?
It looks a lot better.
Exactly. You hate consistent daily charts.
I hate daily charts.
You hate consistent daily charts. But this is what you kind of want to see.
Yeah.
I like that actually.
I kind of like it too. So, hunting, usually it takes us longer than two seconds, but you get the point. You see it, you identify an opportunity in energy, and then you spotlight energy, and you find the cream of the crop, best technical setups.
And I'm saying this, and I really mean it. You should do a YouTube special, Matt, on literally what buying the dip really should mean. I think literally is the most misunderstood, misused thing out there.
I have it. Traders. It's session 3 of the step system, bullish retracements. There you go.
Buy the dip.
I love how Mark always volunteers people to do work during the show.
I know. I'm like, Mark, you go do a video.
You want to do a webinar?
You go navigate the underbelly of social media, teaching them how to buy the dip in actual terms when they only want to do #BTFD.
They just want diamond hands. Yeah.
You enjoy that, bro. Yeah. Diamond hands. Colt.
Let's flash through the commodity market next. By the way, while we're talking energy, good transition to crude oil. We did get some.
Although, Mark, I do think a 10-minute technical deep dive on what buying the dip technically means.
It'd be a big thing because although I do love the memes I see out there on message boards.
I won't be able to compete with the memes because
I love the memes that are like, I bought the dip, but it keeps on dipping.
That's because they don't understand intraday analysis yet. So I'll tell you what, Chucky. I'll tell you what. I'll do it. I'll do a 10-minute deep dive on what buying the dip actually means.
I think it'd be a great video. I think it would be a great video that many individuals It would make a huge difference
Okay.
in their journey.
Sounds good. We'll do it during the halftime report one day this week. Let's flash through commodities quick here. Mark, I'm going to bring you in. You do
Did
the
you
commodity.
just offer my services, like you and Mark?
Well,
Like,
no,
I
I
went to, wait a
offered them,
second,
and then
hold
Tim's
on.
like, "Well, how do
I went to do a video, and now I got to do a deep dive in the halftime report. That's
Mark wanted you to do a
45
special
minutes.
webinar, like
I
2
wanted
hours.
you to do,
Listen,
yeah."
by the
He's like-
time we get done with this conversation, I'm gonna be
That's-
putting on a 6-week course here in 3.
Let's
I'm
do
doing
it.
a 10-minute video. Let's roll.
I think that's very, very good. People would really appreciate that. Commodity time, guys. Let's do it. Marky, what are you seeing across the spectrum? Let you walk through the whole thing. Where are you paying attention? What are you seeing in crude oil?
Listen, we
first?
got a support
gold?
level that was tested several times several weeks ago that was started to build, came down and tested it. Very curious, right there around $60, right? Very curious and see how that holds up. When crude oil has these nasty sell-off days, and it hasn't for a long, long, long time, usually get really, really choppy price action. Matt's been talking about, the peak of oil, at least in the short term, is done for a while. Just expect a range. And once again, a range in oil is very good for crude oil energy stocks that you might be trading. If it can trade between 60 and 65 for 3 months, that's a huge win for energy stocks.
That won't be a negative for energy stocks. Energy stocks might be negative for other reasons, but it won't be due to crude.
It won't be due to crude.
To be fair, I said crude oil's was over here, like before all of this. It's just the volatility shifts here are. I never like when you see consistent price action here, and then random shifts in volatility. That always gives me a major pause. That's a major stop sign for me.
Mhm.
Now, if for some reason 60 doesn't hold, right? COVID variant, OPEC says,
and it could break.
Then you could look at a big drip because you don't have a lot in the terms of support.
Not till
below
54.
Yeah, and so that 60 level's the big battle zone right now on crude.
Well, you got the 60 zone here, but the zone is important. That zone goes all the way to the 50 at 58. So that zone right there between 58 and 60. And again, when you get this type of volatility and look at your ATR just go up and up and up, think about this back here, guys. The ATR was kissing around 130 against a price level of 58. Right now we're kissing $2.50 against a price level of 60. So the price level is the same, volatility's doubled. And so when you see that type of volatility shift, it lacks the consistency you want. It just does. And so it's not surprising, but it also wouldn't be surprising to see, crude come down and test these 54, 55. But again, the numbers you're looking at right now in the support test, and it is important because it's going to play a role in the energy analysis in the short term, is 58 to 60. That gets violated, you're a day away from 55.
Yep.
Well, and I love, first of all, I think the most important thing you guys have been talking about with crude for a while, it's very important. Go back and listen to the podcast for about a month ago. We don't need crude to go to 100 for energy stocks to still do well and be a part of that theme. Like you said, Matt, maybe other things affect the volatility, but it's not going to be crude prices at $61.
It would be more,
barrel.
it would be more cyclical themes in bond market and how that storyline plays out. But again, as long as crude's above an average price over time, energy companies are going to be fine.
Mhm.
And when you go from fourth quarter 2020, crude prices averaging 45, 46, 47, versus first quarter of 2020, obviously we're getting done with the first quarter this week. Crude price is going to easily average in the 54, 55 range, right? 54, 55 range, maybe even slightly higher than that, depending on what we finish, depending on where we finish. Those prices are going to be healthy for crude over time, as long as they maintain. Obviously, crude starts dipping and getting slaughtered, energy is going to get caught up in that. But as of right now, like I'm not worried about energy based on crude oil prices today.
No, me neither. Keep running through the rest of the commodity market here if we can. Gold next, kind of hesitating, and really there's not much to see
Hesitating a little bit, but it wants it.
It does
It
want
wants
something
it.
here, doesn't it? It's starting to consolidate the last 3 days.
And I'm going to tell you guys something. Okay. When you look And I'm not going to go off today. And what I mean go off, I mean go off on Jay Powell and his stupid commentary on the dollar today. Literally ridiculous. You can't even make sense of what he said. In fact, I'm going to do it. I wasn't going to do it. I wasn't going to do it, but I'm going to do it.
Now, do you want to wait for gold or Bitcoin to do it, Matt?
I'm going to do it together.
Totality.
Because unlike Jay Powell, we are together, united in one. We are one crew. Bitcoin and gold owners, one crew. And Jay Powell, your stupid, nonsensical commentary today is not going to stop that movement, because the dollar, Jay Powell, is not superior in everything to every other asset. And we all know it, Jay Powell. So I'm not going to spend a lot of time on what he talked about with the Bank of International Settlements today. I'm just going to give you a couple of his quotes, Mark. He says today, now he gave a speech today, gave the intro speech at the Bank of International Settlements. It was an online forum today. It's one of the major Fed speeches from this week. He stated that Bitcoin is not a substitute. I'm going to give you some of his major takeaways, and you tell me if you agree or disagree. Okay, guys?
Yep.
Okay. And we're looking at gold charts right here, but we'll look at Bitcoin here in a second.
Mm-hmm.
He said that Bitcoin is not a substitute for the dollar.
That's correct. It's
Okay.
not. It's not going to be.
It's not a
currency.
substitute for the dollar. It's not a reserve currency. Yeah. I agree, but it could be for gold.
He said it could be.
Yes.
I don't use it that way.
I don't know how he can make that statement.
I don't think so.
Okay. One's physical, one's digital, literally. But okay, let's move on from that commentary. He would not proceed with a central bank digital currency without massive public support and with congressional authorization. And so there's a lot of commentary recently around crypto in general, dollar digital, these central banks digitizing their currency through algorithms. China is most likely going to be one of the first countries to do so. And the Western governments, through Jay Powell and the Bank of International Settlements, is saying good luck to you, China. They are not looking to create a central bank digital currency. Now, mind you, the dollar's already digital, but we're talking cryptos we're talking a different type of technology here. And so they are not looking to do that without congressional authorization and without vast public support, which we are light years away from that. Mm-hmm. Light years away from that. Now, he goes on to say, quote, crypto assets, and this is a quote from Powell, crypto assets, we call them assets. He said that sarcastically. They're highly volatile and therefore not really useful as a storage of value, and they are not backed by anything. Now, is that accurate?
That is
Cryptos are highly speculative and not backed by anything.
Besides
the faith and confidence of people to utilize it, correct?
Correct.
Okay. Now, to me, that statement, if you took the word crypto asset and replaced it with the dollar, it would be an identical statement. So once again, crypto assets, we call them crypto assets. They are highly volatile and therefore not really useful as a storage of value. Who was the last person who made an argument that the dollar is a storage of value? It doesn't, guys, the long-term charts on the dollar is not storage of value arguments.
No.
Never. So what is the instrument that has been used as a storage of value literally for the dawn of time? Gold. It's gold, right? So again, whether you agree or disagree with gold as an investment strategy doesn't change the philosophy that gold is seen by everybody as a storage of value, correct?
Correct.
Now, this is the same individual, Jay Powell, that runs the central bank, correct?
Mm-hmm.
Okay. Just keep that in mind here. Now, he goes on to say they are more of an asset for speculation. So they're, speaking of crypto, so they're not particularly useful for payments. Tim, would you agree with that?
You don't use Bitcoin to buy
You
stuff.
do not
generally.
use Bitcoin to buy things.
Yeah,
least-
just because you can in a few
Doesn't
select
mean
areas
you
doesn't mean
do.
yes.
Right?
So
Yes. Okay. It's more, again, he's coming on. I mean, he was about as anti-crypto as he could be in this speech, guys, which is par for the course in central banks, right? They're anti-Bitcoin and they speak their book more than any other institution in the world. He then goes on to say it's essentially a substitute for gold rather than the dollar. So he spent the entire time making the argument for the dollar as both a superior asset class in terms of speculation and storage of value and as used as a transaction. Guys, those three statements can't be true. He knows that. He knows that.
I don't
And
know what
then
you're talking about, Matt. After Jay Powell's speech, I'm like, I love fiat currency. Yeah, sure. Why
that's
not?
what
You know?
he gave an extremely pro fiat currency speech here today. I just want to remind Jay Powell that if gold is similar to Bitcoin, and if you truly do see gold similar to Bitcoin, because that's what he's saying today, right?
Yeah, that's what he said today.
I'm not just creating conjecture here.
Nope.
He stated that gold should be used in the Bitcoin analysis.
He said it's only a speculative asset.
And he is highly negative about Bitcoin, correct?
Mm-hmm.
And the central bank does not own any Bitcoin, correct?
Correct.
No.
Then why does the central bank own trillions and trillions and trillions of dollars of gold?
Well, there's obviously not logical cohesion in what he was saying with the actions of owning gold.
Which
by the Fed.
again, Mark, I just want to say yet again publicly, Jay Powell is a coward. He's a liar. He's speaking his book. And what he said today is about as nonsensical as you can get. It made literally 0 sense historically. It made 0 sense within literally sentences combined together had no reason to be combined together. It made 0 sense.
Listen,
0 sense.
Listen,
And
every
so
time these people speak, they only embolden anti-fiat individuals such as all of us.
And more than anything, Bitcoin bulls out there, Bitcoin bugs out there, gold bulls, gold bugs out there, one crew, same team, anti-dollar, anti-Jay Powell. Jay Powell should be fired. And I'm going to say this about gold. You see this price action here? You see this nasty price action on the weekly chart? It's either this or it's this. And I'm going to tell you right now.
I like that analogy.
It is 100% this. You have the exact same economic, central bank commonality in this subprime move here as you had in this move here post-economy reopening and pandemic. So either here you're saying this is the top price or you're saying this is go time. And after Powell said today, it's go time. And so, yeah, I wasn't going to, but I'm going to. I like a trigger above 1750 here. I like it long term. It's a daily aggressive trigger, but I like the zone of gold. And I do think that the gold chart from a fundamental behavioral perspective is far more like 09 than it is earlier last year of 2020.
Yeah, and listen, my number one job in life is to provide a future for my children. That is my number one job, and there isn't a close second. And Jay Powell, a big middle finger to you, my friend, for you saying that I should put my faith in fiat currency and your shenanigans to protect us. If anything ever bad happens, it's because we're going to have a currency crisis. Like, I'm sorry.
Listen, your worst investment that you can have in the next 10 years is literally paper currency. It is the worst investment you could potentially have. The worst.
So once again, tell me
all
how
Jay Powell is telling you today, dump your Bitcoin, dump your gold, and all you got to do is buy the safe haven asset and the storage of value of the dollar.
Listen,
Pull it all
and
money.
it's important because it's a physical. So once again, tell me more about how Bitcoin is a speculative
Mark,
asset.
You
When
got
you guys are
17 more
engaged,
speeches for this week.
you guys are engaged in the biggest speculative endeavor with fiat currency in the history of mankind.
100%.
You are just hoping it all works out. And you got models that say it will, right? It's,
Mark,
you are engaged in the biggest speculative endeavor in the history of central financial planning. But tell me more how Bitcoin's a speculative asset.
Go tell us how Bitcoin sucks and gold is terrible, you dollar whore.
Yeah, like, listen, you guys are in a trap that you're never going to get out of. You people are either incompetent or evil. I have not decided which one.
Here's the last statement, Mark. Jay Powell also said they don't want to compete with the banks for funding. I wonder why, since you have a printer. Like, oh my God. Like, yeah. I just want to jump off a cliff today after listening to Jay Powell.
I only have one more question for you though, Matt.
Are you sure?
I do. I am sure. Because part of the whole story that I find very, very fascinating as a crypto guy is that he said that they have no plans on creating any digital currency. Had they hinted at that?
He's lying. 100%.
Because we know they've talked about this internally, right? Yeah.
Yes, he is. He's a coward. He's in a butt.
Every major country
far above his head is completely buried here. He's got his head put in the sand. He's the ostrich. He's the coward ostrich, Jay Powell.
Well, you're going to get more of him throughout the week. He's been dominating headlines like 3 or 4 days a week for a month now. I'm kind of getting tired of old.
Yeah, and we all knew this was going to happen post stimulus.
Yep, because lack of news headlines, lack of real actual market
news.
News.
Thank goodness Jay Powell's tenure is transitory.
I didn't think I'd say this, but can we get
I love that, Mark.
Back?
Well done.
And pull back on the transitory, but I gotcha. Yeah, I kind of want earnings season back. At least we could talk about company numbers. I don't know if you want to go that far, but I wouldn't.
I'm not there yet. I'm going to rather enjoy only Adobe and a few other earnings reports here this week. What do you got? Tencent, Adobe, GameStop, and Restoration Hardware.
Yeah, not much.
Outside of that, I think you have 34 mid-cap.
I am fascinated. I know. I don't want to get off on a tangent on it. I am fascinated with GameStop's after hours earnings reaction, because we haven't seen it since all of this craziness start. We haven't seen how algos treat an earnings report after hours.
Absolutely not going to justify whatever is happening.
Because low volume can really make massive impact on earnings.
Yeah, wait till they lose 75 cents a share after going up a quadrillion% in the quarter.
Yeah, so I'm fascinated with earnings reaction.
And then wait for everybody to be like, oh, it's just a Wall Street trick, just dumping the stock. And it's like, no, they didn't come close to hitting any metric at all.
Listen, I'm rooting for the GameStop.
I am too.
You're playing a difficult game. You're playing a difficult game.
Listen, you have more courage than Jay Powell if you hold through that earnings. I can tell you that.
Just the idea of somebody holding this whole long, I find it to be very, very impressive, to be honest. Some of them are diamond hands. They are truly diamond hands.
They truly are diamond hands.
Yeah, it is what it is. By the way, charts on Bitcoin and the dollar, not much there today.
I hope it doubles on earnings, by the way. I hope it goes to $400.
Get your popcorn ready. It'll be a popcorn,
get your popcorn ready.
Event, no doubt about it. A couple of quick corporate items I wanted to get through here today. I got a couple of downgrades as well. And then Mark, you got some trash that makes cash for later?
I get a little bit, right? Listen, the underbelly is a little shaky right now. So I'm going to go just with a couple picks in an area I like on trash, but we'll do that in a second.
Sounds good. KSU or CP? Actually, give me CP. They're the acquiring company. Pretty big merger in the railroad industry here, Matt. Kansas City Southern is being acquired by Canadian Pacific Railway, and they are going to make one of the first, tri-country Canadian, U.S., and Mexico rail systems that we've ever had, connecting supply chains up and down the unit. Huge merger, $25 billion in stock and cash, a cash and shares deal that they did. Nice M&A activity news here. These things aren't really affecting broad markets, obviously, the way that they can in some market conditions, but interesting. Do you have any interest in the railroads? Either one of you, by the way, just interesting news for me. I don't know if I have interest in the stock or not, but Mark, what about you? Any interest in the railroads here?
I mean, there's a lot of ways to play industrials right now, right? I mean, I don't know if railroads are my favorite in that, but I like the space. I like the sector, I should say. So I like the sector. So if you get a good trade set up, in a railroad, the space should do well. I think I like other areas a little bit more within the industrial space, but I like the sector moving forward.
And as is common, CP gapped down on the news because they're the one paying. KSU gapped up on the news because they're being acquired. Got a little bit of a premium on their stock price. That merger is going to be going through over the next couple of months. AstraZeneca, we'll kind of flash through a couple of these, then we'll get into some of those upgrade downgrades. AZN has been in the news for the last year as they've been developing this COVID vaccine, released it. It's been very much out there across different countries, not necessarily in the US, mostly in Europe. And they started actually pulling it in short terms, concerned about some of its effects, but quite frankly, they put out a study today that should alleviate many of those concerns. 79% effectiveness against symptomatic disease, 100% effectiveness against severe disease and hospitalizations based on a US-based trial. Good news there. The stock is actually going up here a little bit. I got no interest in the company, more interested just in the news on vaccine rollout. Let's see here. Couple more. Tesla, TSLA, another bit of juice from old Kathy Wood and the ARK Investment Fund. She said she likes Tesla worth $3,000 a share by 2025. Here we are.
I am not making fun of Kathy Wood today, because last time she said Tesla $4,000 a share, I did, and she was right, and the rest of the world was wrong.
Mm-hmm. Yeah, that's what made
disruptive innovation is something that is quite impressive, quite frankly. And I think it's something we all need to learn a little bit more about.
Even on her most bearish, because she actually outlined 3 different scenarios. On her most bearish case, she has it at 1,500 based on some volatility, market conditions and whatnot. So,
mind you, her price target is 2025. That's only 4 years. That would put Tesla at a bigger company than Apple. Now, obviously, Tesla going to that level would also mean Apple goes up too. So, but as of right now, that would be a higher market cap than even Apple has right now. And Tesla's PE ratio is 1,000 right now.
That's
hey Tim, I'm willing to bet you that Tesla goes to 1,000 before it goes to 3,000.
No, thank you. Good trick. Good try there. And touche on the callback. I had you dead to rights on that last year. Let you out of that bet way too early. But
do you guys have interest on this weekly dip here?
That's a clean resistance area, and if you clear those moving averages, which are acting as a little resistance, it's a clean trigger.
Yeah, I kind of like it on the weekly.
It's a clean trigger.
Yeah.
And then I got a few upgrade downgrades that actually caught my attention here today. Wouldn't mind kind of getting you guys' take. You guys want to play the game? You want to play the game?
I always love upgrade
or
downgrade.
Disagree on the upgrade downgrade game. Let's do it. Start with booking. BKNG reopening theme, travel type stock, actually caught an upgrade by Bank of America to a buy from neutral. Stock actually down here today with many of those cyclical areas, but it did get an upgrade here. I'm going to start with you, Mark. Do you agree Bank of America upgrading booking to a buy?
Yeah, I'm in agree. I like moving forward the reopening play. Once again, those COVID headlines in Europe have set back, and Germany's talking lockdowns for a 4-week period. They don't know if they're going to do it. Paris had a 4-week lockdown. I mean, you're having those negative headlines weigh on reopening. Plain and simple fact is we've had more. We are distributing more vaccines than we're getting COVID cases in the United States. We've had a really stellar vaccine distribution. It's very underreported in the finance. It's almost just accepted. Like, yeah, it's done basically. And while there definitely could be some COVID headlines, like I know CNBC, and once again, whatever their agenda is, I don't know, but they've started to run COVID negative headlines, COVID and negative headlines. All the data is very positive on vaccine distribution, reopening. Now you are getting those Europe things that are causing some pullbacks. That pullback could be a little deeper in areas. Hope it is. But yeah, moving forward. So I agree with the upgrade.
Okay, Matt, anything to add to booking?
Yeah. I don't agree with the upgrade specifically on booking. I do agree with the upgrade as a potential buy to fit the theme, in this area. I certainly understand that. Booking's fundamentals are, and this thing could be said about a lot of these leisure type travel companies, right? Their fundamentals are just garbage, right? But bookings fundamentals truly are garbage. Like 1,800 P ratio, forward 24. I mean, get it perfect and they're still garbage type scenario. And so a lot of what's happening on booking, I feel, is just caught up in the sector getting rotation to it a little bit. And so I do like other areas of this sector a little bit more. And I know this is not a sector upgrade outperform, but when I'm looking at bookings fundamentals, when I'm looking at booking being, and my read on booking is it's being brought up at the high tide, right? And when something's just being brought up at the high tide, I don't think you upgrade that specific instrument. I think you upgrade the instrument that is the high tide, right? And so no, I don't agree with the upgrade. I think this is getting caught up in the overall story arc in the last 4 months. And when you're looking specifically at this sector, little bit of weakness here today, obviously, with booking in the sector itself, kind of, that just the theme that played out a little bit, broad market speaking. But if you had to take your pick, I mean, I'd take Expedia over bookings,
In a heartbeat,
right?
not close.
And quite frankly, I'd probably take Carnival. No, it's not a problem. I absolutely would take
TripAdvisors as well.
Carnival over TripAdvisors, very similar. TCOM, a little, smaller stock. I could see a potential trigger technically above the 50 and that $10 significant whole number. And so I just think a fairly quick journey, hunting expedition through this specific industry. I think who did the upgrade?
Bank of America.
I think it would have helped Bank of America if they literally just would have hunted a little bit.
Just look.
So I agree with Mark's analysis 100%. I just think booking's not the tide here. Booking's the ship that got destroyed and is just getting floated with the tide.
Mm-hmm. Yeah, I agree. I like these other ones better. Expedia and Trip, specifically, even CCL, like you're talking about. All right, next one here. We're going to start with Matt, and then we'll get another one from Mark here next. Bank of America downgraded 2 social media companies, Snap and Pinterest. Both of them caught a downgrade from BOA to a neutral rating from a buy rating. Pins had just been on an explosive run earlier in the year. Snap has been on a tremendous run as well. Matt, neutral rating on these 2 popular stocks. The charts have rolled over.
Yeah, I agree with both downgrades here. Both have shifted volatility, both have shifted trends, both have shifted patterns, and so you're at best neutral in Pinterest right now. And so I think it's a wise downgrade, quite frankly, to kind of fit with what's going on with the technical condition. You got a lot of navigation here just to recover certain things in Pinterest. When you're looking at Snapchat, very, very similar, but I think the analysis is actually a little stronger on Snapchat. You got a very standard head and shoulders type formation. Technically, you're looking at a potential violation of the neckline here. Necklines can be horizontal, necklines can be vertical. A vertical neckline is what you're seeing kind of from this formation right there. So you see that neckline in the head and shoulders formation, that neckline gets violated, all of a sudden you see some downward moves in price that get fairly aggressive. Horizontal necklines are when, the head and shoulders formation comes into the same historical support level on the left shoulder. You do have a little bit of that too, but this is probably the more clear neckline you can draw. So yeah, you do have some technical weakness, and Snapchat and Pin has fallen out of favor, with the market in the short term, and especially with comms, holding up. Snapchat, Pinterest, part of comms did not hold up nearly as well as the sector did. That also is playing a role, I'm certain, in Bank of America, or it should be playing a role in Bank of America's analysis here. The sector holding up, individual components not. That gives you a little bit of a different philosophical viewpoint towards these 2 stocks. Neutral is an accurate rating. Give Bank of America credit. It's a good read here.
And last one here that grabbed my attention. Wendy's got a downgrade to hold, but don't care. It's so neutral in a long-term range.
Yeah.
Pepsi, though, consumer staple company, the giant software maker, they were called overweight, which is always an interesting one, right?
Well, that's just silly.
Overweight from equal weight, one of the best picks in the sector. They say they like Pepsi coming off the lows.
Oh, we got my favorite game, sector.
Yeah.
Oh, all right.
Sector.
They made it okay. Now, to be fair, we're talking about the staples consumer defensive sector. So like we're not talking comms, industrial, we're not talking the theme in the marketplace, we're not talking growth, we're talking consumer defensive staples. Okay, so the upgrade, it is an upgrade, outperform, overweight against the sector. Basically, you're saying this is the cream of the crop in the sector, correct?
Correct. Yep, that's what they like.
What do you think, Mark?
I could care less. Listen, like
I'm shocked. I'm literally shocked. This seems like a mark chart to me.
This seems like a mark chart.
It's a year-long consolidation coming off of support.
I just
dividend-paying staples
with
company.
a dividend.
Yeah.
Okay. Here's my problem on staples, and other than Walmart, Costco, the big retailers, which I really like long term, my problem with staples as a whole is I'm seeing 100% producer price index, companies pushing cost. I've seen staples sell off big time before when those costs get pushed. Inflation is everywhere in the materials commodity section, pushing prices up. I think it spills over into the packaged good companies this year. And so I have zero interest in it because of that reason. Staples, I do like Walmart, I do like Costco, but the packaged good companies, not a chance for me.
It's interesting. I haven't thought through that. I'm going to have to noodle through that. So increasing inflation and cost, they're transferring to consumers, but you don't think they'll be able to get the profitability out of it. Is that?
I think their margins. I think
you think margins will be hit
in Staples, because I used to follow Staples all the time, and margin things are a big deal, right? Especially in a short-term sentiment thing. I think they got margin problems coming up in this transitory environment. So I think they got.
And I'm not there yet. I certainly could see some analysis there, but I don't think we're there yet. I mean, I when you're talking specifically, you know, your packaged goods, right? I mean, KHC here, I actually really like that potential breakout in Kraft Heinz. So I certainly understand the concern on the margin as due to inflation. If the CPI report, you know, if the CPI report is a 100% trajectory of the CPI report, you could have some concern there. But I think we need some time to see that concern play out. And so when you're looking at it from a, you know, a packaging perspective, right? And you got Kraft Heinz, but you just look at overall, you know, your package company. So if you look at the S&P 500, there's 9 companies within this industry in the S&P 500. All right. Now, these companies typically do not move with, you know, as aggressive as the market does. They have a beta underneath 1. Kraft Heinz here, Tim, and these are all components within the Pepsi sector as well. Okay. Now, Tim, do you have the same concern in Kraft Heinz?
Not anywhere near.
Okay. No, and would you rank Pepsi higher than Kraft Heinz?
Nope.
Okay, now not the same industry, but they are the same sector.
Right.
Let's take a look at, you know, Conagra Foods, right? CAG, and I'm looking at some potential breakouts here, right? Prolonged neutrality, very similar to Pepsi. Maybe a breakout there, 35 long term. Yeah, I'm not that interested though. What about here's a potential reversal that we talked about last week as well. You're seeing it confirm. You see that double bottom, double top, breakout and run. This is a beautiful chart to upgrade and say, I think we're going to play a little bit of catch up. And so I would rank Kellogg higher if I felt we were going to get catch up based on that technicals. Pepsi had none of that. Pepsi, you were at the low, right? You got a little bit of double bottom, but you're really just in a prolonged neutral. Kellogg's had that prolonged downtrend double bottom. So no, I don't agree with the upgrade and the overweight. I think whoever made that argument is missing the beat on Pepsi a little bit. I see Pepsi, quite frankly, as underperforming the sector, and the only reason it is now today outperforming the sector is literally just the upgrade.
Because of the upgrade.
That's it. Yeah. That's it.
Yep.
And so I don't have Pepsi technically or fundamentally better than the components within its sector. I don't think it's better than the components within its own industry. And so, no, I like literally, I don't know what they're looking at. Sector perform makes a lot of sense here. Outperform and overweight. I mean, what are we doing?
Yeah, that completely looks neutral sector
Like
perform
what?
to me.
Like,
I agree.
I don't know.
I
Maybe they
agree.
got it. Maybe they got a better viewpoint than I do.
Listen,
Dude, maybe they
Pepsi's
took the
been
Pepsi
understand.
challenge.
and I'm not even saying, I'm sorry, I'm a full-blown conspiracy. I've seen about 4,000 articles on CNBC in the last 3.5 weeks on how Pepsi's awesome buy long-term. Someone's getting paid somewhere.
They're getting
on
paid.
Pepsi.
CNBC is like, Lord Almighty, they're not even like, they're being fairly transparent on them getting
They're
paid
not
these
even
days. They're not even
hiding it.
trying to hide it anymore. They're like, yeah, we put our content, who puts our ads. Like,
Yeah.
okay,
Yeah.
okay. I hate the world. But Tim, let's just make this simple. Pepsi or Coca-Cola?
You'd buy Coca-Cola.
You buy Coca-Cola.
Yeah.
So if you can't even answer the equation of Pepsi over Coke, it doesn't matter the rest of the analysis.
Mhm.
And so if it's as simple as look at this chart, Pepsi or Coke, and my 11-year-old would have told you Coke, what is the Bank of America analyst looking at? Seems like somebody getting paid on that one.
Probably. All right, guys, that's all I got on upgrade downgrade here. Last segment we're going to run into is our trash that makes cash segment. We've been doing this on Mondays. Marky, I dug through the bottom barrel stuff under
I got one.
$4 in the market. I found one.
I got one.
You got one as well.
I got
but
one.
Mark, this is you first. So why don't you lead us off here? Explain this
I got
segment.
two, and they're both in the same industry. It's an industry I really like. We're gonna make this really simple on my end. First of all, let's go to CCJ. I love uranium this year. I've loved it for the whole year. I've been pushing uranium. Dirty, sexy money, CCJ, setting up a nice Cody special, right? A little Cody special. Now, I'm highlighting uranium today. Brought this up a few times. Last week in the uranium spot market, we saw the most aggressive buying from companies like UEC, which is one of the trash that makes cash today, that we've seen in 10 years. Now, there has been a theme. Michael Burry of Big Short, really,
dude, he got shut down the other day by the SEC.
He did. He
Oh,
did.
man.
And once again, this is what I like about the stock market. Aside the fact that it's financial freedom and all of that is how I grow my money. I love the drama and I want to know the backstory of that.
Listen, if you're a drama queen, you'll love the stock market.
There's all kinds of stuff always going on. But Michael Burry and a lot of people, listen, I like the uranium space. If we went to a 10-year chart of CCJ, uranium's been beaten up for a decade. That always appeals to me. And so I like uranium in general. It's had a really good year so far. I think there's a lot of movement still to go. So my two picks are both uranium focused this week. Two areas that if you want to go a cash flow route, big premiums, but there's obviously, albeit choppy, not the cleanest, but this is penny stock land. You don't always get the cleanest charts, right?
It's about as clean as you can get for a penny stock world, though.
So we got two charts in two different things. Like, so UEC last week on how UEC was purchasing uranium, got a big algo news spike. That's what the upward spike movement is. So the pullback is natural in penny stock land. UEC, the other one is Denison Mines. I've brought up this before, DNN, little short-term consolidation pattern. Once again, you don't get the cleanest charts in this little area, but clear entry signal. Love how it came down to the rising 50 a couple weeks ago in the volatility, bounced to the penny. Love that daily support zone. And so whenever I get a bounce to the penny, there's no real fear. But I love the support zone that formed at $1 over that couple week period. Pretty clean. Even for a penny stock, for any stock really, it's pretty clean support. Bears had plenty of chance, a little consolidation pattern. You can cash flow it if you desire, but I do think there's directional and cash flow opportunities. I think uranium, whether it's CCJ or some of these little penny stocks in Denison or UEC.
Well, and
I think there's opportunity.
yeah, and I do too, Mark. I mean, you take a look at CCJ, and that's kind of the one
The
we
biggest
look
uranium
at,
mining,
right?
publicly traded mining company.
And you got to be interested here in CCJ. I think. You know, and again, we're kind of missing some price action here, but you're seeing a little bit of the same type of concept that comes into slowing momentum. And so you get this breakout here on CCJ. You establish your higher high. You're now fighting for that higher low, and so now you're just walking up the ladder, or the stairs, whatever analogy you like the most. You first test that support trigger coming into the breakout channel that does go all the way to 17. That's in between the buy zone of the rising 9 and the rising 20. Your first test in a trend is going to be your momentum triggers, right? Your momentum test. And those momentum tests are always going to be 9 EMA type driven tests. Some traders will do a 9 and a 13 kind of zone, 9 EMA, 13 EMA, but you know, we like that 9 EMA just to make it simple. You get that first test, and that first test, typically you're in, you know, bull flag type patterns is the typical pattern you're really kind of looking at. You know, those Cody special snapback retest of old breakout channel type things. So the two patterns you're looking at is the snapback or the flag base. This would be a snapback, right? Flags are more consistent, 30-minute charts just kind of coming down. Snapbacks, breakout, snap right back, retest. So you're getting that first test of the 9 EMA here, and obviously if that holds, trigger above, that's an aggressive trigger, and you could definitely see price appreciation there. Anywhere into 17 though, like anywhere in that zone right there, oh, that's legit. Like anything in this rising 20 to current price action, you're living on an intraday chart saying just trigger, just trigger. Like anywhere in that zone, just trigger. Just give me my double bottom, give me the double top. Now, obviously, when we're playing trash that makes cash here, we got to stick to that, you know, under $5 analysis. And your first one, Mark,
UEC.
you know, UEC, very, very, very similar analysis to what you're looking at CCJ, but I actually think this chart's cleaner. I think you got a slightly cleaner chart here on UEC than you even have on CCJ. You're looking at this intraday analysis here, and I'm going to break that down here in a second. But when you see this type of snapback and then stick the landing, I have not even looked at the intraday mark. I didn't know this was one of your picks, but I'm willing to bet you can see some pretty decent intraday zones for stop loss management. And that to me is so important, that you can see a very consistent intraday level that you're comfortable putting a stop loss under. And I see two levels that are pretty comfortable for me based on the step system methodology that we utilize at Tackle Trading. I see the first one at 2.7 with the backstop there at about 2.63. And so you can very easily get a stop loss underneath one of these intraday zones here where you feel comfortable. And I would start it at the 2.63. I think that is ultra aggressive at the 2.7. You're not taking that much, and you got some wick analysis. So just get a stop loss underneath there. And so when you're looking at the stop loss, you're saying, yeah, I got a clean stop loss I can utilize. Or excuse me, I got a clean technical condition of where I need to put a stop loss. You know, when you're looking at it from and you see that over here, right, 2.6 there, you do got a 2.58 wick over there. I'd probably just get it underneath 2.58 just to make sure I get out of that. But then when you look at it from a triggering perspective on a break on the intraday, you got this 2.9 level right there that is the high of today. You do got a wick that's on the intraday. Don't really care about that. I think you got a pretty clean trigger at 2.9. So stop loss underneath 2.58, entry above 2.9. These are all technically driven. Those are both fairly clean. Target on UEC is going to be a little bit more difficult given the fact that you got some volatility here, obviously, but you're probably targeting somewhere up into this range, 326 by 367. Let's just see those from the body of 325 to the wick of 367. Let's use that as in that T1 momentum. T2 would be based on, potential average yield, or I'm going to say Fibonacci, Tim, because I only use Fibonacci as a way to confirm potential average yield
Let me look
targets.
here.
But nope, you are not going to look here. But for now, you're probably looking at somewhere around a $4 target on the secondary target, 4.10 in that range. Because it's 410 backstop of 4, I think you're targeting 325 by 4. That's a good trade. I think it's a clean setup, and it gives you an alternative to CCJ. Typically I'm like CCJ. Love the snapback here on CCJ. That's the play. It's dirty, sexy money. That's the play that I feel. But the intraday analysis is not as strong on CCJ as it is UEC. I like the technical setup behind UEC, Mark. I like that one. Your other one was DNN, correct? DNN's got a little bit of a different flavor, obviously, technically here. A couple things very positive, though. Number one, you do got neutrality in the short term. You do have a double bottom at that, slightly south of the one handle. You do have a double top right there at 130. So you do have a double top, double bottom, which means this is neutral versus what you were looking at in your other two stocks. CCJ bullish uptrend with the snapback bull retracement. UEC bullish uptrend with momentum with the bullish flag-based pattern. This one's more neutral based on the pivot confirmation of the double top, double bottom. Now, when you're looking at that, I don't think you can buy the snapback retracement in a double top type scenario. But what you're looking at is saying, I love this increase in support from this. I absolutely love this. And what I love about it is the last time it ran from 97 cents to $1.30, it got beat back down. The last time it ran from $1 from that exact same level to $1.30, it got beat back down. It can't run 33 cents before it gets tired, guys. Well, now it only has to run from $1.11, which puts that into breakout territory. And breakouts can't have momentum. And so whereas I do think the snapback retracements and flags on CCJ and UEC can be triggered, DNN, I think you're looking at this as a positive, but only into the breakout of the double top at 130.
For the first time in Trash That Makes Cash history, Matt talked more about my stocks than I did.
Listen, finally get a technical setup and I can talk about it.
That's not garbage. And there's
Technical
not earnings
analysis
next week.
is a nice bonus in the world of penny stock land.
Maybe it should be a requirement.
Oh no!
Okay, I just triggered him. He's like,
no,
no, what are you talking about? You don't need a trend in penny stock world. You don't need anything.
I just need Chico
Fries. Well, Mark, two there that were well received. Some good technical setups.
Both of them technically set up. Obviously, we're talking CCJ, which is dirty, sexy money, not penny stock. Yes, dirty, sexy money is infinitely better than penny stock. I know that the name does not suggest that, but
Dude, it's just a higher class version of my penny stock world. That's all.
That higher class, there's a substantial difference in that higher class.
Yeah.
But I do take the point, and it is a fair point. There's no doubt about that. You got to pick one of the two in UEC versus DNN, though. If you are playing that, to me, I like the UEC with momentum a little bit more than the increase in support breakout potential of DNN. But that's me.
I have more exposure to USC than I do DNN, but I like both my positions. I plan on playing them long term.
Yeah, and UEC, I mean, you could see some pretty decent trades if it doesn't even trigger. Let's say you get stopped out. You're still looking at support at 2.5, saying if 2.5
those
confirms,
deeper pullbacks on CCJ, on UEC.
This trade might not. Yeah, if this trade doesn't work out, you're going to re-up at 2.5. Just dog.
Yeah, so
I got one though, Chucky.
I want to hear
me. You convinced me, and you said you didn't like the railroads. Correct?
No, I said I like the space. I think I like other areas in the space better than the railroads.
Well, I'm going to talk about some railroads in your neck of the woods, bro. Okay.
Dude, there's no railroads under $5.
Yes.
Oh,
there
there's
is.
that's an equipment company. Yes, you're right.
They use REL. They're not Norfolk. Yes, you're right. I'm loosely saying space, bro, but we're talking
no.
land. Okay, but REL, Freight Car America here. Now, technically, I like the deeper pullback here, Chucky. So this isn't a snapback trigger with momentum. This is deeper pullback analysis. So you see the deeper pullback here? Clip the 9, clip the 20, clip like rolled that 9. Look at this, Mark. Look how rolled that 9. Janet went on a journey, and REL just rode it all the way down. Look at that. Now look at it. Look at it turn around. And then today. That's using it as positive. Okay, you got confirmation today, but what type of confirmation are we talking about is important. Let's talk about confirmation on the weekly chart. That's what is important. Now you look at this on a weekly chart, Mark, and I'm willing to bet you are a little bit more excited right here on REL on that weekly chart as you are on the daily chart, correct?
Bro, you already had me. I've already bought shares and covered them. I'm already
30 seconds
listen, no.
You took away all my analysis.
I could see it. It was awesome.
I can explain. He saw 168%.
I know exactly what he saw.
And he's like, okay,
and he saw, wait a second. Okay. Before the pandemic, this stock was 16?
No, Matt, this is what, first of all, it's not 168% volatility. No. It's only 113. Let's just not exaggerate, you know.
And it's only 220 on the weekly.
Yeah, it's 168 in May. So
we don't need to talk about that.
Like, don't confuse me with the facts. It's fine.
Okay, you're right, but that's a positive for how Mark approaches this. I don't know why, but it is.
Yes, it is.
Again, when you're looking at that the daily chart, this is a whole bunch of chop here, right? When you look at that daily chart, look at all that chop. Look at all that chop. But I'm looking at this right here.
I'm sold from right space, technical pattern. I love that weekly technical pattern.
Tim, what's that number there?
$3.
That's significant, right?
Mm-hmm.
Okay. See the old resistance? See the new support? Coincides with the significant whole number? Oh, we're lining them up there. And then you see this. Look at that 3 handle right there.
All technically
very
clean.
Hold on. I'm not done.
It's this earnings report.
I got it. Doesn't matter what the earnings number is. Okay, Mark taught us last week that earnings are not important to penny stocks.
I'm gonna drink my coffee.
You should on this one. I'm deep diving. Okay, look at this momentum. Look at that. Now look at the subtle change in behavior over here. Head and shoulders, breakout, confirm. Now I don't think we're recovering 20.
Don't have to.
But you don't have to make this really good. I like the weekly chart here. I like a position style trade on REL, Mark. What do you think?
Already in. No, I'm already in.
Tim, and even with your little subtle jabs, I know you like this deeper pullback here.
It's a wonderful analysis. I love the weekly chart. I love the reversal potential and the characteristics. I just personally will wait for earnings, and I'll put it on my trash list. That's my rule. When I'm doing swing position trades, I don't hold through earnings. So.
Yeah, because look at all of the volatility that occurs on earnings in penny stock land. It's just,
Yep.
Do you know what earnings season is in a penny stock? Every random Tuesday.
It's a buying opportunity.
Every day's earnings in penny stock land.
Listen, I don't know if what Mark is saying is true or not, because this is not my world. It matters in my world, which typically means it matters here too. I love the technical analysis.
I love it. I love the space. They make freight cars, right? Listen,
honestly, even
I
if
love
you
the
wait
space.
for a positive earnings response and you're waiting on the breakout of 4, I still think a breakout of 4 can be triggered with momentum.
Mm-hmm.
So if your thing is wait for earnings, then wait for earnings.
Fine, sure.
Right. But I don't, unless you get a blowout one way or the other, I still think you got some analysis here.
Yeah.
I like it.
I do as well.
And I wasn't talking your book. I was talking his.
Oh no! Listen, I
You appealed
seriously
the
bought
mark
share.
instantly. Like for playing the game, the parameters of the game, you win the game. So you
Listen,
absolutely appealed
listen,
to what
aren't you
this is.
supposed to play the game to the author of the game? Is that why I figured out why you never win a game?
Are we talking about playoffs? Playoffs?
Like Tim's like, hey, let's go play a game of football, but he plays baseball rules. Like,
You
what are you
play
talking about?
to win.
No, and I'm going to dive deep
Game.
because I did my minimum allocation just on the initial analysis. I'm going to dive deeper and see if this little freight car
And
manufacturer has
just
some
to
legs.
be clear here, you said you didn't like railroads. I didn't have a pick for trash that makes cash. I went and looked at railroads and found a railroad. That was my level of analysis. So do your own homework, Chucky.
Dude, that's just why we're a team.
Haven't you ever played
This is true.
Monopoly? You got to like
This
the
is true.
railroads. Pick them all four up. You know,
Listen, I was gonna say that, like Tim's like, do you like the railroads? Like, who doesn't like the railroads? Like,
Gotta
what are
love
we
the
talking
railroads.
about? Nickel and dime. That's like not getting Australia in risk.
The last risk game we played, I did get Australia and won.
That's because you wind your way to it.
Yep, absolutely. Have to do it. I like this analysis. I love the play. I had one extra, but I cannot top these guys.
No,
Honestly.
we're not.
No.
I've seen yours.
Forget that thing. Give me SWN. Let's go. Light it up. Energy play, relative strength, breaking out instead of pulling back, even though energy was on a pullback. Southwestern Energy, they do a lot of natural gas as well as some crude processing, Mark. So you're not just getting your crude play here, you're getting some NG as well. And it's looking really good on that weekly chart.
NG? I'm not sure.
A little bit of both. They do a little bit of everything. So
T Southwestern, I gotta look into it. But yeah, you're not looking at this on a daily chart at all. You're looking at this on a weekly chart. It smooths out that volatility. Position style, I can certainly understand. Energy has seasonality right now. Let's see how that works out. You got pretty clean breakout here.
And Southwest, I know this company. They're actually not a very volatile penny stock. Volatility is only in the 50s or so.
This is a weekly chart, Mark, and this thing has only went from 250 to 450. That's not very volatile.
That's
not for penny. Listen,
no, not for penny.
And actually, interesting note about Southwest, they actually have weekly options. Not common in penny stock land. So a lot of volume, relatively low volatility for this area of the investing universe.
Somehow
weekly
I know
options.
Part of this 224.
Like and pretty tight bid ass spreads.
He's part of the volume.
So
yeah. So do you like it, Mark?
Look at Janet acting as support there.
Or do you need 50% more implied volatility to like it? Are we good with 50?
Like it.
Dude,
I like
we're only 60%.
The only thing I don't like is that we're at the resistance range. I would like to see it break out of that.
If it ain't triple digits, it really needs to get its act together for Mark.
Is it really underbelly? It's not 100%.
Well, it is a little too stable for my taste, but like I still would go out with it. So,
like if you can't blow up an account, it's just too stable. I kid.
That is our
all jokes aside, technically speaking, those are some pretty decent charts.
There's some opportunities down here. I like the weekly charts on these better, obviously. Smooths everything out. When you talk about these crazy volatilities, it kind of gives you a better read. But hey, couple of ideas there in Trash That Makes Cash today. Thanks for sharing them with us, guys. Guys, that's our show for a Monday here, first day of the week. Markets are starting off on a little bit of a bang here with the NASDAQ. Last reading I saw, NQ contract. What are we up now?
NQ?
Yeah.
300?
2.3%. Guys, we're pushing towards that intraday resistance level. Keep an eye on it throughout the week. Join us on a daily basis.
The nice thing that's happened throughout the day, too, is NASDAQ has basically flatlined for the last 2 hours, but the S&P has kind of been chugging up. So, I mean, that's once again.
That is positive. That's
a positive thing.
Positive here today so far. The level on the NASDAQ we're looking at, though, momentum's picking up on the intraday. A little hesitation over the course of the last hour or so, but 12, right in that 13,250 level to that double ding at 13,340. So you got about 100-point range there on your resistance breakout. it's going to be interesting to see how we navigate that this week.
I agree. Yeah, that will be the battle through the week and something we're going to be paying attention to on a day-by-day basis. By
Not
the
a lot of
way,
economic reports, not a lot of earnings reports this week, not a lot of international events. Just quite frankly put, a lot of Fed nonsense this week,
it
and
is.
I'm not. Well, I can't say that. They're on the hill. My goodness.
Listen, I have no idea what they're going to say tomorrow.
Listen,
Interest rates are going up. Well, why?
I am summarizing everything Powell and Yellen says in less than 7.2 minutes combined the next 2 days.
Mm-hmm. By the way, that the heated conversation in the chat today has been around whether Tesla can actually hit that $3,000 mark.
You know what?
There are believers and
2025.
non-believers.
I mean, I'm not going to second guess Elon. Like I did that once and I regretted it. So I'm not going to second guess Elon. And I'm certainly not going to second guess Kathy Wood. She's a rock star, literally being made through our very eyes. She is the face of a movement of disruptive innovation. And like I said early on in the show, when she came out with that 4,000 price target, that was before Tesla split, guys. That was before Tesla split, and that was back when Tesla was like $350 or $400 or something like that, and that was again before the split, before it had the rocket to 2,500. Like myself, I was like, this, like, what world does this exist in? Well, Kathy Wood found the world, and she was right, and the rest of us were wrong on that. So I'm not going to second guess it. 3,000 is a very extremely ambitious goal. And I think even Kathy Wood would say that is not probable. That 3K is not exactly probable in less than 4 years here. I don't think we're talking about Tesla at a $2.5 trillion market cap in 2025. But even if she's even only slightly right, that outpaces the S&P growth in that environment.
Yeah.
So I would have to say no to the 3K target just because that does not exist in fundamental reality. Like, it just doesn't. I don't think you can make the fundamental argument, but Tesla's not a fundamental driven stock, or it wouldn't be where it is right now. So I don't want to second guess. I don't want to second guess Kathy Wood at all. I have immense respect for her, what she has been able to accomplish through her ARK investments, and her being the face of a movement that I actually really appreciate, disruptive innovation, right? I hate how too often companies get stuck on the status quo. And so I like that type of philosophy. Tim, you know me, you've called me a bull in a china shop my whole life.
Mm-hmm.
That's disruptive, right? That's somebody coming in and saying,
willing to
well,
say and
the
do what needs to be
norms are
done.
not what you think is the norms is actually holding you back, right? And your complacency in building your company is holding you back. Your processes you're doing in your company is holding you back. Your failure to innovate is holding you back. And so I don't want to. I certainly don't want to disagree with her, but that 3,000 target is very ambitious. I do not see that happening. But again, I didn't see what happened last time either. So I'm going to say no to the 3K. But I think Tesla. I think. Well, let's face it. In our little draft we had, the little Mark's special draft we had 3 weeks ago, Tesla was my number 3 pick. Because it is the face of that disruptive innovation. I think you need that in your portfolio. And when you're looking at all the typical disruptive, innovative type companies out there, and you're looking at all of them, why wouldn't you put the face of them, Elon Musk and Tesla, in that portfolio over that time frame? Fundamentally, it's thin ice, but it's been on thin ice for 5 consecutive years, right? So yeah, I could certainly see it, Tim. I like Tesla. I like Tesla long term. Do I like it like Kathy Wood likes it? 10% of portfolio? No, and no. But I do think it makes sense in this environment over that time frame. I do think it makes a lot of sense.
Which makes sense why you picked him number 2, having that disruptive innovator with potential growth in it. If you do get
quite
Kathy
frankly,
Wood's
Tim,
number,
I targeted the 2 companies in that list that I felt were disruptive.
Mhm.
And so, yeah, I do feel like a portfolio needs a little bit of ESG. I do feel a portfolio needs a little bit of disruptive innovation. I do. Does it need a lot? Probably not, but it needs a little bit. Does it need 10% of Tesla like Kathy Wood does in the ARK investments? Probably a little aggressive. Can it hit 3,000? Yes, I think it falls shy of that, but it still does something fairly decent.
Yeah, I agree. And it's captured our chat today. They're debating it as well. I
Dude,
love seeing the back and
it's a
forth.
fascinating conversation.
Yeah, I
I haven't
agree.
seen the chat, but it is a fascinating conversation. And Tesla, man, it'll bring up the passion, right?
Absolutely.
But one thing I will say, because I've seen this in other conversations, sometimes people think arguments are people simply having conversations. When somebody has an opinion, that's just part of a conversation and doesn't, it's just conversating. We should have more of them. I love it.
I agree. I agree.
Just team tackle. Let's always respect one another.
And they have. It's been
I know. They
overwhelmingly
always
positive
do.
today. It's
Yeah,
great convo.
Team tackle's
actually.
amazing. I love them.
Guys, we're going to go podcast. We do it every Monday. We'll be releasing another episode here today over the fundamentals.
What about you, Tim?
I believe
3K Tesla?
Yep.
2025?
I think it can get there. It doesn't mean it will stay there.
Mark?
Listen, at the risk of offending people, I will never own a share of Tesla at these prices.
But he will own shares of companies that Kathy Wood owns shares of.
Yeah. Oh, I love Kathy Wood, and
which
I'm
means
a
you
total.
just don't like Tesla, though, right?
Dude, everybody's an EV company these days. Like,
exactly.
there's just so much competition.
Except Tesla. Tesla's
Except
something
Tesla.
much more than that.
Yeah, they're not going to be able to sell the regulatory credits. They're a Bitcoin company now.
Okay.
I got plenty of ways.
Podcast conversation.
Done. We're done. We will continue this convo on the podcast. Outside of that, guys, if you're not yet a pro member of our community, there's a trial link to every one of our YouTube videos. Come and join us. Go through those weekend reports. Get ready for the week with us through our webinars and courses.
Tim,
yeah,
I do got to say one thing before you send this out. If you would have given me the answer that I gave you on Tesla, I would have called you out for sitting on the fence. I'm going to say no, Tesla does not achieve that. I just don't want to be sitting on the fence. I just don't want to say anything negative about Kathy Wood because
I hope they do. I don't care.
Tremendous respect for Kathy Wood.
I can make all my financial dreams come true and never trade Tesla, long or short. So I always root for
Tesla goes
people.
to 25, Mark, your portfolio is going to do really, really, really
Listen,
well.
I root for people to do well in their investments. I'm not going to be short Tesla.
Elon's
Michael
just
Burry
like
is,
boy.
but I'm not. So.
you're gonna have to fill me in on that Michael Burry story after we're done here.
Dude, Burry's getting shut down by the SEC for saying anything negative about the stock market.
Is that right? Oh,
it's a story. We'll talk about it.
We'll talk about it. All right, guys, we're out for today.
We're out,
see
guys.
everybody
Team
back
tackle.
tomorrow.
Have a great Monday.
Have a safe day, wonderful day. We'll see you tomorrow.